Well, good evening. Once again, welcome to my home. Thank you so much for stopping by. This is part 4 of a series of discussions about money, political economy, and economics. This 4th segment is called, quote, How Banking and Currency Might Have Begun, unquote. It isn't an official Occupy Tacoma statement. It reflects my particular point of view. The majority of Occupy activists, unlike me, are not socialists. My name is Alan OldStudent. I am a blogger and writer, one of the Occupy Tacoma website administrators and editors. My cited documentation is in the downloadable versions of these articles, which you may find on the www.occupytacoma.org website or the www.alanoldstudent.com website. How banking and currency might have begun. Tonight, we are going to draw a quick sketch of how banking and currency might have begun. This is not a detailed historical analysis of the early grain banks of 2,000 or 3,000 years ago, or of the early Muslim and Chinese currency and banking systems. Neither is this a drawing of the early banking systems of medieval Europe. Instead, we'll paint a simple picture of the social and historical tendencies that eventually gave rise to modern banking and currency. You know, historically, people agreed to use a specific commodity for money as a medium of exchange. Some early forms of money were made of valuable metal. That metal money could be melted down to make metal tools or weapons, or those metal tools and weapons could be melted down to make coinage for use as money, as a medium of exchange. Earlier forms of money were very pretty little shells called cowrie shells. The Romans paid their soldiers in salt, which had a high exchange value at the time. The Latin word for salt was sal, and the word salary likely comes from that. Today, we still talk about people being worth their salt, don't we? For many years, people used gold as a currency, but gold was hard to store securely, took up a lot of room, was quite heavy, was easily noticed, and boy, was it tempting to steal. So people put their gold into the safekeeping of a trusted person to guard, a gold guardian, who charged a nominal fee for the service. When you took 2 ounces of your gold to this gold guardian, she gave you 2 vouchers, each of which might say, payable on demand to the bearer of this note, 1 ounce of gold. Now, suppose the gold keeper was 3 villages away from you, and there were lots of robbers and highwaymen and wild beasts on the road between these villages. And then, quite unexpectedly, you find you need a much bigger tent because your sister and her 8 children are going to stay with you for a while. The tent maker in your village happens to have a suitable tent worth 2 ounces of gold, but your gold is 3 villages away, and all you have are the vouchers and the prospect of a difficult journey to redeem this gold. So the tent maker suggests that instead of going 3 villages away to get the gold with all of the risks of the journey, you could just exchange your gold guardian voucher notes for the new tent. Meanwhile, the gold keeper has been busy building her business. She has acquired 100 ounces of gold from the various people all over the countryside for safekeeping. She originally started making money by charging for placing the gold in her very sturdy little safe and keeping records, but she also notices that the villagers for miles around are using her voucher notes as currency instead of just constantly running to her to get their gold out of her safe. In fact, the villagers seldom come back to redeem their gold vouchers or to cash in their vouchers. Instead, they just use the voucher notes as currency, as a form of money. Then, the gold keeper decides she'll make some loans of these vouchers that say, quote, payable to the bearer of this note on demand, 1 ounce of gold. But in order to accumulate gold, she decides to start paying the depositors to let her borrow and use this gold instead of charging her depositors a fee for guarding it. She's paying interest to her depositors, and she charges borrowers interest, hoping to collect more interest from borrowers than she pays out to depositors, always making sure she has enough gold on hand for those depositors who decide to redeem some or all of their voucher notes. Even today, if you put money in a modern savings account, the interest the bank pays is much less than the interest the bank charges if you borrow money or use a credit card, right? The bank borrows money at cheap rates and loans money at high rates. Did you know that when you put your money into your savings account at a bank, you're actually loaning the bank money? Oh yes, they use your money for investments or to loan to their borrowers. Consider this further hypothetical example. Your brother-in-law wants to buy a camel worth 2 ounces of gold, but he doesn't have that. So he decides to borrow the asking price. But the gold guardian lives 5 villages away, and it's a really dangerous journey. Your brother-in-law is afraid of getting the gold robbed on the way back home if he obtains the loan in the form of gold. And besides, schlepping that much heavy gold is such a chore. However, the salesman in the used camel lot says he'll accept 2 1-ounce of gold voucher notes instead of the gold, so your brother-in-law sets off to the gold guardian for a loan of voucher notes. A loan of voucher notes, not gold. He gets the loans and voucher notes because the voucher notes are far easier to hide on the donkey, are lighter, take up far less storage space as he travels the dangerous trail back home. He doesn't mind paying a small fee for the loan and for the convenience of having the vouchers instead of the gold. And the vouchers are as good as gold for the purposes of buying a camel. Indeed, they are a form of currency. They are a form of currency. The gold keeper's small fee for making this loan is what we call interest. The interest also helps cover the risk, and she always ensures she has enough gold on hand to maintain the confidence of her customers and her depositors. This then is sort of a simplified explanation of how early currency and banking started. Of course, the details have changed and become considerably more complex over the centuries and as banking spread, but the dynamics of the earliest stages of banking are really pretty much the same wherever they occur. We'll talk a lot more about how financial institutions and money have evolved over time, and about how banks and other financial institutions have become a monstrous parasite on society in some of our future discussions. But for now, let's review what we have covered so far in our talks. We have discussed value, both use value and exchange value. We explain the nature of commodities, the factors of production, labor, raw materials, wealth, currency, the early roots of banking, and a few other concepts as well. That's quite a lot. I hope all of this has been clear. If it hasn't, ask questions on the website or review earlier presentations. We are beginning to lay the foundations for understanding our modern economy, socialism, capitalism, corporations, property, modern imperialism, and the nature of power. But to really understand our modern system, first we need to take a quick historical detour in the next few discussions. Thank you so much for visiting. It's been a real pleasure. Be well and good evening, and do drop by again.